Hey guys, welcome back to the channel. In the previous episode, we have discussed the basic stuff regarding supports and resistances. In this video, we will go a step further, seeking the depths of support and resistance levels. We will talk about how to identify if a level will break or not, how to approach our trades using supports and resistances. That is, if we should trade a breakout or should we trade a reversal. And finally, we will learn to find trades that other traders fail to notice. Let's get started right away without wasting any time. The first and foremost question is how to identify when a support or resistance will break. To get started, when you see a series of higher lows into a resistance, you want to avoid selling at the resistance. The reason is very simple. Let me give you an example. Let's say you have a huge hammer in your hands and it's really powerful. And right in front of you, there is a brick wall. Now you take the hammer and smash against the wall many times over and over again. Now let me ask you, will the brick wall hold or is it likely to break? Well, common sense tell you that the brick wall is likely to break. And this is exactly the same concept when a resistance level is tested multiple times within a short period of time. The chances are the resistance will break. Now, I'm not 100% sure that it is going to break because no one can be 100% sure in trading. But the odds of resistance breaking are high. And likewise, when you see a series of lower highs into the support, the chances are the support level is going to break. This is because the prices hit the support level multiple times in a short duration of time. We will expand this idea further in this video when we will talk about breakout trades. Moving on to the most important question, how to find the best support and resistance areas to trade. We can approach this question with two trade ideas, the breakouts or the reversals. We will understand when one should take a breakout trade and when to take a reversal trade. Now let's start with the idea of trading reversals. The most important question associated with this type of reversal trade is how do you know that a particular level is likely to hold? Only if the support or resistance level holds can you enter a reversal trade. Otherwise, you will end up in the wrong side of the trade and you will incur losses. In order to trade reversals, I want to share with you a few tips to bear in mind. The first and foremost thing is that you want to see a power move or a momentum move or a strong move into the market structure. Now what this means is that if you have drawn an area of support or resistance, you want to see a strong move into the level. By strong move, I mean big or large bodied candles, which in turn means that for an area of resistance, you want to see a strong bullish candle coming into the area of resistance. And in case of a support level, you want to see a strong bearish candle coming into the support. Now this is what I mean by a power move or a momentum move. I know this sounds counterintuitive as to why one should trade a reversal when there is a strong momentum move. So you can ask me, why do you want to sell when there is such a strong bullish momentum into the resistance? And also, why do you want to buy when there is such a strong bearish momentum into the support level? Right now, don't worry because as we move on, we will find clarity as to why I am talking about this. Now the second tip that I have to give you is that you want to see a strong price rejection at the area of value. That is the area of support or resistance. You want to see a strong price rejection. The price rejection can be in form of a pin bar. The pin bar may be a shooting star or a hammer, etc. The idea is to see a long wick where the price gets rejected from the particular level that we are considering. Let's say this in case of resistance. A big bullish candle comes into the resistance and suddenly it gets rejected. And the stronger the rejection, the better. And that is exactly what you want to see. Let's take our discussion a little deeper and understand it closely. Initially, I have told that you need to see a strong momentum move or power move into the area of support or resistance. Let me explain why you want to see large bodied candles into an area of support or resistance. Now let's say when you look at a resistance and when you have a strong move coming to the resistance level. At this point, ask yourself what exactly a resistance is. So in the previous video, we told that resistance is a price level which stops the price from moving up, or simply it is a level where the supply is high. Now also think about the fact that where exactly will you face an opposing pressure, or simply where do you think will the buyers come in so that they could buy at good prices. So if you think about a good price that the buyers would come in, and if you look at the chart, the chances are that buyers would always love to buy at an area of support. So it is obvious from the market structure that the buyers would wait for the price to retest or reverse to the particular support level so that they can buy or they can go long. Further, the price rejection at the resistance indicates that the buyers are not willing to buy at higher prices, and this is exactly the best place to initiate a short trade. The other reason being, the only place where you have to be afraid of the buyers coming back into the market is the support level. The advantage of taking a short trade at the resistance is that you can leverage the difference between the support and resistance level so as to obtain a high reward to risk ratio. However, on the downside, if you don't get a strong move or a momentum move into the particular level, instead what you get is a choppy move with a lot of swings like this, then it is not a good idea to short on the resistance. We can ask the same question here also. Where will the opposing pressure come in? That is, where will the buyers come in so as to get a good buying price? Well, this time around, the bias could potentially be at these swing lows. What this means to a trader who is looking to short at the resistance is that as the price approaches to these swing low levels, you will be facing opposing pressure that could turn the tide against you, and you would not get a good reward to risk trade. That is exactly why you don't want to go short when there is a type of stair-stepping price action or a swing price action into your levels. The reason being, all these swing low levels are opposing pressures where the buyers could potentially come in and push the price against your trade. Now, another reason why you want to see large candles or larger momentum candles into a particular level is a very simple idea. Often when there is a strong price move, for example, there is a strong bullish move into a resistance level, most traders just look to buy the breakouts. I'm pretty sure that you have done it yourselves, right? So when there is a strong movement up, you might be thinking, let's buy the breakout. The market is rallying and it will continue to rally. So the simple decision at that point of time is to buy. Now this is where the twist in the plot comes. Where will you put your stop loss? Now because you are taking a breakout trade, it is pretty obvious that you will put your stop loss under the resistance or maybe in the middle of the range or somewhere in that close vicinity. What is the importance of this? Now what this means is that if the breakout fails, it is going to hit all these clusters of stop loss orders that is placed under the resistance. And what exactly are these clusters of stop loss orders that are waiting under the resistance level? They are simply orders to exit the market or square off the positions which were kept by those breakout traders who went long on the stock. This in turn means that these are actually sell stop loss orders which will induce further selling pressure in the market. Now, more stronger the bullish move is into the market structure, more breakout traders will enter the trade and there is more buying, and more buying in turn means more selling stop loss order behind the resistance. And if there happens to be a price reversal or if the price reverses towards the downside, it will hit all the sell stop loss orders of these breakout traders. Another key thing to remember is that the longer the price is away from the particular level, the better the trade is. And why is it so? The thing is, the longer the price is away from a particular level, the more it would attract the attention from higher time frame traders. For example, if a price has not retested to rupees 150 level on a daily time frame for let's say 3 months or 6 months or even 1 year, then you can be sure that this particular level can be seen on the weekly time frame or even the monthly time frame. And because of this reason, it will attract more traders from the higher time frame to pay attention to these particular levels. And that is why you get a strong price rejection or a reversal at a level which has not been tested for a long period of time. Alright, now let's learn to identify breakout trades. Most newbie traders trade more breakouts than reversals. When they see a strong move, they think that the market is going out to the space and they jump into buying the breakouts. In the next moment, there is a price rejection and there is a strong reversal in the opposite direction. And all these traders get caught on the wrong side of the trade, which in turn results in hitting their stop losses, which forces the price to go even lower. Now, when do you trade breakouts at supports and resistance? This concept is actually pretty much the opposite of what we have just learned earlier in case of reversals. So you know that price is likely to reverse at a support or a resistance when you have a strong power move or a strong momentum move into a market structure with a price rejection. When you are looking at it from a breakout standpoint, you don't want to see a strong momentum move into the market. In this case, what you want to look for is a price action that we have discussed right at the beginning of this video. We have to look for higher lows into a resistance which somewhat look like an ascending triangle, or we should look for lower highs into the support which somewhat looks like a descending triangle, or even a third type where there is a price buildup which is supported by a moving average. Now let me cover each one of them. Starting off, higher lows into a resistance looks something like this, and you can see the price looks somewhat like an ascending triangle pattern. This is significant because it's telling me that the buyers are willing to buy at higher prices and the sellers are not interested or they are weaker. The ascending triangle pattern tells me that the sellers in terms of their strength are getting weaker or they are getting feeble. The thing is that the first time the sellers managed to push down the price by a good margin, and in the consecutive times it got weaker and weaker. And this is a sign of bullish strength that the market could possibly break out higher. Now, at this instance, you don't want to be shorting at the resistance because number one, you don't have a momentum move into the resistance structure. And number two, if you were to go short into the resistance, there are swing levels which have been formed where the buyers could potentially come in, and result is that you will hit your stop loss. Now similarly, let's look at lower highs into the supports, which are the same thing, and it tells me that the sellers are in control and they are willing to sell even at lower prices. And top of it, from a price action standpoint, it is telling you that the buyers are also getting weaker, because this is a condition where the buyers barely push the price higher, and the subsequent times it only moved smaller and smaller. They were not able to push it any higher. Similar to the previous case, you should not be going long in this case, as the sellers are the dominant force and there is a higher probability that the market will break down. And in case if you go long, there are swing levels which were formed during the ascending triangle formation where there is a possibility that the buyers can come in, which will in turn result in hitting your stop loss. Now you see the price action is quite interesting, right? Where one side is getting stronger and stronger while the other side is getting weaker and weaker. Now let's discuss the third type where a build-up is supported by a moving average. In this case, the price could just come to a key support or resistance level and it just consolidates there. Now if you bring up the moving average, like a 20 period or 50 period moving average, you will notice that the moving average supports the price and vice versa pretty nicely. It's like the market is really respecting the moving average and it is getting ready to break out. So if you find a build-up or a slight consolidation when the price reaches the support or resistance, it is always an indication that the price is about to break down or break out. Now let's hop on to the final question, how to find support resistance trading opportunity that most traders fail to notice. Now it's very simple. If you are a trader who enters at a daily time frame, then you have to go to a higher time frame like a weekly time frame, and then you have to look for build up or a tight consolidation. This is because when a higher time frame is forming a tight consolidation, there are chances that you will be able to find support resistance trading opportunities on a lower time frame like a daily time frame in this case. Now taking another example, if your trading time frame is a 1 hour time frame, you should spot a tight consolidation on a higher time frame, which in this case could be a daily time frame. And if you are able to find a tight consolidation in your daily time frame, then it is likely that you will find a support and resistance trading opportunity in the lower time frame, which is a 1 hour time frame. This is a pretty good technique that you can use to find support and resistance trading opportunities in the market. You can also use it for even shorter time frames like 15 minutes or even 10 minutes time frames. The only thing to keep in mind is to appropriately select a higher time frame and find a tight consolidation in the higher time frame so that you can find the support and resistance trading opportunity in the lower time frame. Now that is it for this video. I hope you have a good clarity about supports and resistance and how to approach your trades with supports and resistance after watching this video and the previous video. It will boost my morale if you like this video and motivate me for putting more effort for making high quality videos. And don't forget to subscribe the channel so that you don't miss out on the upcoming videos. I will see you guys with the next episode. Till then, see ya.